The silver breakout has exploded past $61 like a supernova, igniting the night sky, with JPMorgan quietly preparing for a $100 cataclysm amid the dollar's catastrophic crash and the solar surge that's devouring the world's last reserves. The 10th of December 2025 today. As the fallout from the Federal Reserve's fateful fiat flickers across every financial feed like fireflies in a funeral pyre. The Fed unleashed its third-rate laceration of the year this morning, a gossamer zero. 25% gash, that gashed the federal funds rate down to the gasping 3.5 to 3.75%. Gulch, a gambit the gamma traders had gamma gamed at 87% gospel. But Jerome Powell's post-pronouncement from the Fed's fortified fane? It festered with the foul frost of hawkish heresy core PCE inflation ensorcelled at 8% in its unyielding snare. The trajectory to tranquility is tangled and tentative, he intoned with icy intonation, inscribing a 2026 itinerary of a pitiable 2 more quarter-point capitulations, parsimonious and pale against the plenteous panacea the pit prophets had prophesied. The dollar index, in vengeful vituperation, didn't dip it detonated, plummeting to 99. 2 inches, a 5-week sinkhole that savaged 7% year-to-date in savage savaging, its most malingering milestone since the tariff tornadoes of summer scorched sentiment into scorched earth submission. Silver, in this sepulchral storm, didn't demur it, detonated to $61.23 an ounce, a blistering 102% year-to-date conflagration that crushes every chronicle from the Hunt Brothers 1980 apocalypse and anoints it the asset of Armageddon. Gold gallops grimly at $4,216, a steadfast 55% surge. But silver's schizoid splendor as primordial pelf and pivotal powerhouse of progress positions it as the pantheon's pariah, the breakout's blazing beacon. Yet, what wedged like a wild thorn in my throat this tide, as I trolled through timely tidings from JPMorgan's vaulted visions with the VIX vaulting in vicious volatility, was the unyielding uplift to $100 by Q2 2026 JPM's proprietary projection, averaging $92 for the year's yawn, impelled by a 500% solar surge in demand that's set to swallow 200 million ounces annually by 2028. Central bank consecrations cresting 1,200 tons of gold in tandem terror, and fiscal fissures fracturing under 350 trillion in global gravitas. Why this prophetic $100 pinnacle now? As the dollar's crash to 99.2 cascades the solar surge into silver's solar plexus? My theory, tempered in the torrid forge of twilight trawls through custody crypts and council communiques, is that this breakout transcends tidal teas. It's stage 3 of a 4-stage cataclysm that's cataclysmically carved commodities from the coin clips of Caesar to the crude crises of Carter. The Fed's feigned felicity has fractured the dollar's dike, deluging the destitute toward durables in desperate durance, but those hawkish harmonics? They're the hidden harpoon hurling us toward stage 4, where silver's sprint to $100 isn't a saunter, it's a seismic sledgehammer. Premiums prefiguring the purge as BRICS Bastion's blueprint, silver clauses to bisect dollar dominion by 30% trade tilt. Industrial infernos from photovoltaic phalanxes to voltaic vanguards vampirize vaults at 149 million ounce deficits yearly. Central cathedrals consecrate 1,200 tons of gold in grim gospel up 20%, yet silver's Janus-faced jeopardy, monarch of money and minion of machines, martyrs it as the messiah of this monetary maelstrom, the solar surge, its solar sacrament. At $61.23. Silver isn't inflated. It's insultingly inexpensive amid 350 trillion in global gravitas and fiat's 54-year phantasmagoria post-Nixon's 1,971 notch. The portal to pilfer physical before the $100 target tidies the timid and the hawkish headwind hardens into hurricane. It's splintering under JPM's bold banner and buckling beneath the dollar's deliquescence. But you still shoulder the sledgehammer if you swing it before stage 4's surge scorches the stragglers into sterling submission. Before we wade into this wave-whipped warning and the dollar's doomsday dive, let me buttress the bulwark with brutal, unblinking candor. I'm not a financial advisor, and nothing wading from this watery wake constitutes counsel in coin or creed. This is unsparing educational endoscopy from public pantheons, the exhaustive COMEX custody canticles, JPMorgan's proprietary projections, IEA industrial imprecations, Bloomberg's hawkish headlines. I've waded through these watery wilds like a whaler in a white squall, bolting the breakers into bastion, and the bulwark barring our bay is no bogeyman. It's the self-same, surge-seasoned sentinel that systematically stripped the speculators and sovereignly sanctified the seers across silver's sanguinary scripture. To truly trace why the silver breakout explodes past $61 with JPMorgan's $100 preparation amid the dollar's crash and the solar surge's searing ascent, catalyzing a global gale that guts fiat's facade and undervaluation's unforgiving forge, we must meticulously map the four-stage monad that's methodically mangled markets from the aureate adulterations of Augustus to the OPEC oil odysseys of October 73, a formidable firmament where complacency cements the catacomb of the credulous, expansion etches the escarpment of excess, recognition rends the rampart of reality, and eruption engulfs the edifice in eschatological ecstasy. This archetype isn't airy alchemy alchemized from arcane ether. It's alighted from the anvil of antiquity's anvils, from the blight-blasted barrenness of Ireland's 1,845 potato purgatory to the Russian-rigged rigidity of palladium's 2019 to 2020 plague, and now it hammers silver's hallowed hammer with the USD's 99.2 nadir as the necrotic nexus. Stage 1 is complacency, the cloistered complot where copiousness cultivates the canker's covert cradle. Envision the post-hunt holocaust of 1,980. Silver staggered to sub-$10 derision in the doldrums, regulators rearing a rampart of reprisal that reared futures fortifications 50 times the physical palisades, open interest overindulging to 244% of COMEX's custodial crypt. Complacency commandeered the collective consciousness. Prices picketed perpetually under $30 for a languid decade of lassitude. Central cathedrals cascading reserves like confetti at a coronation of credulity. Industrial ingestion idling indolently at 40%, while mines marshaled 100 million-ounce surpluses with scornful superfluity. Debt, dormant dawdling at 50% of global GDP's girth. Fiat, freshly forged from 1,971's Nixon notch, unbuckled but unbowed, unquestioned as the unassailable umpire of unlimited utility. The system slumbered in smug serenity, hoard the holographs of hollow promise, hail the handlers of the hallucination, disregard the dirge of depleted depths. Complacency compacted silver's sovereign sparkle into a coiled catastrophe, a camouflaged catapult cloaked in the calm of collective credulity, cocking the crossbow of crisis with cruel cunning, priming the powder keg for the solar surge's private pyre. Stage 2 is expansion, the encroaching entropy where escarpments erode inexorably, but empires endure in egregious error. The 2008 edifice's entropic eclipse epitomized this epochal excess. Lehman liquefied in liquidity's lethal lapse, a 30 trillion QE quay quarried from global granaries, Fed's folio fattening eightfold. Edicts erected empires of ephemeral edifice derivatives delving into quadrillion depths of delusion, silver shorts storming to stalemate spikes, prices probing then prodded low despite deficits denting. Industrial insurgency insinuated itself insidiously. Solar slurping pace doubling to 85 million ounces by 2020. EVs engorging 3 times gas guzzlers, 5G spires and AI arsenals aching for Alloy's arc. Silver Institute scores 59% industrial by 2024, from 40% mines maxed 2015 at 886 million, sagging 7% since byproduct blues bedeviled zinc and copper. Deficits? 149 million 2024. Fifth year, shored by scrap, but expansion entombed it. Paper peddling 100 to 1 tangible. JPMorgan jockeying from shorts to secret stashes. USD, unruffled pre-99 plunge, but expansion excavated entrenchment. M2 mushrooming 40% post-plague. Inflation incognito via CPI chicanery. Silver stewing slighted as fiat festered. Solar surge simmering unseen. Stage 3 is the break. The breach where semblances splinter and JPM's $100 taunts. This is our now. Nucleated by today's Fed trim and USD's 99.2 nadir, awakening to digging's dawdle. Central hordes hammering 1,200 tons, 2025, up 20%. The $100 clarion. COMEX registered. Slashed 25% YTD to under 10 million ounces. Eligible 500 million, but strained surfacing as lease rates nudge 2%. Backwardation brushing with spot premiums, nipping futures 10 cents. ETF inflows, SLV 300 tons quarterly, 2020 echoes, physical premiums 2 to 3 over spot, Kitco queues lengthening. Geopolitics goads. Taiwan tempests hike 20% haven bids. Mideast flares reroute oil 10%. BRICS blueprints silver clauses. 20% reserves. Fleeing dollars by 2027. IMF murmurs. The Fed snare? Cut buckles USD 7% YTD to 99.2, beckoning bullion bids, but hawkish persistent PCE halts easing, yields rebounding 0.5 point to 3. 8%. Volatility, vitriol scouring specs before sprint. JPM's $92 average 2026. $100 Q2 on solar 200 million ounces by 2028. IEA 400 gigawatts. Undervaluation indicts. Silver's cap trails, golds, yet anchors no hype 886 million tons above ground. Output capped as grades gutter 30% decade. The $100 target. The traps tell. Cuts lure. But inflation rebound mandates pause, supercharging silver as fiscal foil, solar surge the supernova. Stage 3 throttles shorts, $61. 23, the breakouts bellow, $100. The undervalueds unleashing, or window warps as premiums prelude, solar surge the spark. Stage 4 is eruption. The tsunami's towering torrent where quotes quake to $100, USD's 99.2 wreckage the wave's wrath. Sovereign salvo. China unveils 500-ton quarterly. BRICS codifies clauses. COMEX claims surge 50% as ETFs swap synthetics for sovereigns. Yields yo-yo in Fed trap. Cut negatives lure 20% EM exodus. Inflation 3. 2% core compels curtail. Dollar to 95. Silver's cost collapses minus 1% real. JPM math. $100 Q2 2026. Mine shortfall. Buffers blasted in months. Gapscape. 61 to 100 Q2 on cut tailwind. Tsunamis roar as trap bites inflation spirals 4%. Emergency easing dollar hegemony phrase. COMEX curbs weekly. Defaults 20%. Suits swarm. Short squeezed 100 billion unwind. Premiums puff 20 to 40%. 100 spot yields 130. Eagles mints moribund years. Traps tango. Hawkish cut lulls. Debt service 2 trillion 2027 prints. Inflation 4%. Cuts cascade, hegemony hemorrhages, BRICS 30% silver trade by 2028, solar surge 500% demand. Counter skeptics, yields rise, silver lags, trap twists post-pause print plunges them 1980s 49 proof. CB's dump, reversal rigid, buys since 2010, 1,200 tons, 2025, shatter, no retreat bar, deflation delusion. Industrial subs, silver's 59% tech purity, peerless recycling, 20% sealing, solar no sub. Mines multiply, 7 to 10 years infancy. CapEx crippled post 2015. Output stagnant despite $50 leap, solar surge swallows surplus. Demand dips, geopolitics guards, fiscal fissures forge, IRA subsidies, silver line in green, solar mandates megaton. This epoch's earthquake, 1971 fiat genesis meets 2008 QE eternity, but 2025 debt Armageddon 350 trillion 10% GDP servicing snares Fed checkmate, cuts Kindle inflation, Kindle cuts. Silver recalibrates as fiat's phantom bane. Solar surge the supernova. $100 no apex. 1502026 whispers base if BRICS bolts. Undervaluation at 61.23. 40% shy inflation fair 100 historical. 70% below multi-year map solar surge the undervalueds unleashing. Eruption vaults at 100 Q2. Cascade 150 mid 2026 as trap tires fiat's thread. Not query quicksilver of quandary and solar surge. As the $4,441 gold window welds amid USD's 99.2 nadir and Fed traps tangle, silver's outperform beckons not blind bets, but barricaded bets, possession over punt, resilience over recoil. First, vow to verifiable vault. Spurn ETF ephemera with cash traps and futures fiascos that felled 1,980 flotters. Hail minted monarchs, American silver eagles, maple leafs, kilo purity proclaimed for frictionless frontier flips. Premiums 1 to 2% over spot your bulwark when they burgeon outperform gold's steadier store. Harvest from hallmarked like Apex, serial scan sans spurious surges. Second, harvest hastily physical, 10 to 20 over spot present, but breaks bellow balloons to 100, 200 as COMEX creaks. Fed, cut quartz, but trap teases tapers. Stagger scoop sub 60. 10% parcels pairing the pattern's pulse, silver's volatility vaults, golds. Third, portion prudently. 10 to 15% portfolio for ballast, silver's 1-0 to 1 trap triumphs. Historical outperform gold up to 20. If debt alarms toll louder, blended with gold's spark or treasury's yield net against rogue waves. This hedges the math without betting the farm. Fourth, secure custody unyieldingly. Home safes for tranches under 100 ounces. Fireproof, bolted, insured, or allocated private vaults like Delaware Depository for scale. Keys in your hand. No counterparty. Creeping in via bank boxes or custodian fine print. Silver's outperform demands durable defense. Audit annually. Diversify locations against seizure risks in trap escalations. Fifth, empower with vigilance. Track COMEX eligible weekly. Silver Institute updates quarterly. Fed dot plots monthly. Tools like Kitco alerts or Bloomberg terminals arm you against noise. Verifying the pattern's pulse to time without chasing shadows, silver's edge in panic. The Fed trap's genius is its duality cuts back and buys, hawkish rebukes test resolve, but silver's undervaluation endures. $73 the beacon through fog outperform gold. Choice crystallizes. Embrace physical now. Thrive in eruption's gale, or spectate the transfer, regretting inaction as 73 spot mocks yesterday's hesitation. Every cycle favors the forewarned. This one's no exception. If silver's whisper at 61.23 resonates as roar in your gut, subscribe. I'll dissect the breakout beats in real time, from COMEX cracks to BRICS maneuvers. Comment below. Silver outperform gold to $73 by Christmas? Your insights sharpen the edge. And tune in next. The veiled hands suppressing silver for decades. Fines paid, shorts stacked, the playbook exposed. The trap sprung, position or perish.